Good evening, everyone. Happy to meet you all once again in this video. Today, I'm going to talk something about the trading or the cash flow strategy which I employ, and I follow simple rules for my trading. I don't complicate trading, I don't take risks, but then my rules are pretty much simple. And as a standard disclaimer, this is not a buy sell recommendation. Please do your own research and don't jump into a trade before learning proper trading techniques or exit strategies. So, trading may sound easy when I put some images on the Facebook page or make some videos, but it is not. It's more to do with the entry point, strategy, exit point, and stop loss. Predefined. That's very simple, right? So, anyways, today I'm going to talk five trades which I'm recently looking at. Like, for example, some trades I've entered, some I'm just waiting for certain signal confirmations. I just thought of taking you all throughout this five trades which are likely, and then probably share some thoughts on it, right? So the first trade would be company would be Caterpillar Inc. So if you carefully observe, Caterpillar is a very standard, solid, fundamental company, and then it has fallen by over, I would say, from here to here, like over 15% is it has fallen down, right? So that's a good correction, I would say, and it's a good opportunity. And now, how to decide this particular trade? Again, I'm not going by any other technical indicator. I'm just using pretty simple and basic ones here, right? So the first one is 200-day moving average. Is the stock price above 200-day moving average? If you carefully observe, from all-time high, the stock has corrected by 15%, and then just over 200-day moving average, there was a green candle, and the next day the price has increased, and then again there is a green candle, which is a confirmation. And the third day red, and today is green, probably end up a little bit red, but you can see that the price fell off and then bounced on the 200 moving average, and then it is just going slightly higher. And if you check with other indicators, probably the momentum will reverse. It has bounced off, and probably looks like within a week or 2 or 3 weeks the price will go or bounce till the all-time high here. And now what I'm going to do is just draw a line connecting 2 points. Let's say there is a point here and there is a point here. What I'm going to do is just connect here, connect these two lines, right, and then extend it up, right? And you can either stop it here because there's a multiple support and resistance, or slightly take a risk on being here. So for safety, I'll just do it here. And now if you observe, the price broke this path. That is, the price had a breakout, and then it had a long candle, and then bounce, hit on top, that's the resistance, bounce the support, resistance, again fell off, and then slightly it hit the resistance, and then it was continuously at the resistance line, tried to break out, gave a false breakout signal, and then it came back doom here, right? And now it's starting to bounce back, and our potential opportunity here is there is a good chance that it could come down to again 200-day moving average, which is probably from at this point of price it can come down by 5%. So the idea is if the stock price goes below 200-day moving average, exit the position whatsoever it may be, right? So it's pretty close here. So our stop loss point is somewhere around, let's say, 5%, or you can keep it for safety 10% if you're buying a stock. If it's option, it's different. So all I'm talking about is a stock over here, not options, right? So 5% is a stop loss, and now we have a potential possibility to gain 8, close to 9% till the resistance line. So I would say by risking 5% a stop loss, you're having a potential to earn 9%. So I would say even if the stock again comes down to 200 EMA, I'll hold the stock and then wait for it to appreciate and hit the resistance, and then I sell it back, right? So that's the first company. And again, these are simple strategies. There are many other strategies which over a period of time I'll be sharing with you all, and I'll be also learning with you all. And we can employ as many indicators, technical indicators as possible, but then these are all is going to complicate life and then cause decision bias, right? If you're a stock, if you buy stock and hold it for some time, automatically the price will go up, and then you should follow some rules. The rules, as I said earlier, the entry price, the strategy, the exit price, as well as the stop loss. That's it. This determines a particular trade. Now the next company is Zoom Video Communications, and here if you carefully observe, this is the chart looks like, and let's see where is the 200 moving average, right? See, if you carefully observe, the price was below the 200-day moving average. We should not enter, and then it fell down, and it was slowly coming back to a 200-day moving average, and here resistance, and then it broke 200-day moving average, and this forms the baseline here now. So this will be acting as a support until there is something else, right? So that's the 200-day moving average, and this is 50 and this is 20. And then if you zoom it, here is the golden cross. That means the 20 moving average has cut the 50 moving average, and the 20 has cut the 200, which means again the 50 has also cut the 200 here. So these are golden crosses, and once the golden crosses are there, it's going to be bullish. Now we have determined the entry point here, right? Next is strategy. These are moving average strategy, and we will be following the next one, resistance, right? So I'll disable all these, and then let's see the resistance. Now again, what we are going to do is connect 2 points, right? So there is a gap here, so it's not pretty evident, but then you can see 1, 2, 3, 4 or something like that roughly. Let's say this is mainly on the moving average, but for exit strategy, let's put it as a line here and try to have it here. So I mean, these are not strict rules. Somebody could draw a line like this. For example, you can also draw a line like this one, right? You can. There's no harm in doing that. It all depends on what strategy you're going to use, and then you can connect it like this. So that will be the channel, downtrend channel, and then there is a breakup, right? It's going up, so that means it's a bullish signal, right? This also can be done, but then what I would do is I would actually look at I'll change the color to black. What I'm going to do is determine the exit price. So here I've connected the points. There is a potential upside for if I zoom it here, it will be from here to here. That's around some 15-16%. So we don't know how many days it will take, but then my stop loss here would be again, as I said, the 200-day moving average here. If the stock price falls below 200-day moving average, I'm going to exit this position. That's the stop loss, and that's the second position we have today. Sorry, I'll just delete this, right? And let's go to the third position, Etsy, the e-commerce website, which I love. I do a lot of shopping in this website, right? If you carefully observe, again, the 200-day moving average is over here, and the price has been slightly below it, and then it broke up, right? So 200-day moving average is going to be acting as a new support for this, and let's draw a line here. All right, now if we draw a line, you could actually draw an ascending channel or a descending channel, but then what I'm going to do is a simple channel here, and this connects a couple of points here, and then a couple of points on top. The points are 1, 2, 3, 4, right? And the bottom over here, 1, 2, 3, and then here, right? So this is the channel. So along with other indicators, you can confirm the signal. As the day opened, it was green and it was going up, but then now it is red. never mind, since you're buying a stock, you have all the time in the world to wait for the price appreciation. So let's say as of today, the price is over here. If you look at the potential possibility for price increase, it's around 24%, which is very good, right? 24%. I don't know how long will it take, but then we got to wait and watch. And the stop loss, probably we are very close to 200-day moving average. You can keep it at 200-day moving average or slightly 5% below that, since we are very close. That's up to you. Or you can, if your risk appetite is higher, you can even keep it at 10% below 200 moving average. But then again, it all depends on you, and then you have to practice and experience this to form your own theories. There is no hard and fast rule. Every trader has their own opinion, right? And the third company, I just thought of collecting some cash through this and then buy the Nike shoe, which I always like, right? Yeah, that's the 200-day moving average line. So if you carefully observe, the stock is bouncing, pitched here, bounced, and then gone up, 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 and then bounce, bounce, bounce. So, which means the trend looks pretty similar. The stock price has fallen slightly below 200-day moving average, and then there was a huge rush to purchase the stock, and then it is green for the past 4 days now. Now what we're going to do is simply draw lines connecting the points. That's it. It's so simple, right? The simpler you keep your technical analysis, the better you can take decisions, and the more successful your trade is. Now, there are some complicated methodologies or trades, which obviously there are some techniques which over a period of time as we go, we will definitely learn together, and I'll be sharing with you. Now I'm just trying to draw the resistance line for the stock, and that's the support line. Why this is a support line? If you carefully observe, there's 1, 2, 3, and 4, 5 points over here, right? So that's the support. It's trading in a channel, and now what we're going to do is, I just bought the stock of Nike over here at this candle after the confirmation, and then the next day it opened here, and your stop loss is somewhere at the at the support line or the 200 EMA, whichever you feel comfortable. And the potential upside possibility is like close to 8%, right? So that's a good thing, and we can wait. Since I've bought a stock, I can wait till it appreciates 8% and see if this breakout happens. Next comes Tesla, my favorite. Now if you carefully observe, when the markets opened today, it was like going pretty high, and I'm going to draw the support and resistance line for Tesla. 1, 2, I'm just connecting the 2 points here. Slightly move it up so that it just touches the points, and then you extend it. And the next one would be, this is where the mathematics and geometry is all helpful, whatever we learned in school, right? Right. Once you do this, you can see a beautiful triangle. The stock price broke and then hit the top, bounced, and then hit the top, bounced, and then here the stock could break out today or tomorrow, or hit this and then probably come back, hit this, come back, hit this, come back, and then boom, it could break out. And the next breakout could be from, let's say it happens here or tomorrow, we don't know. All we have to do is wait and watch patiently, and then once it breaks out, it'll form a new trend, and there is a potential upside possibility. Or tomorrow the market could collapse, right? The S&P 500 or the market could crash because of Fed news or something like that. So for that, we have to have a protection where you can keep a stop loss somewhere at this point, or you can keep it at 200-day EMA. 200 EMA is over here. You can keep it here or here, whichever way, wherever your risk appetite, how much so ever it may be, right? So all right guys, so these are some basics of technical analysis, and out of these trades I've entered at least 2 or 3, and I'm waiting for some more positive signals to enter the rest. And if you like it, do send me a message to know more about such technical analysis. And if you want some analysis on Indian stocks, or you want to trade with me, do drop a message so that I can work with you all and show how to do things, right? Please know and learn things in full and then enter a particular trade, right? Don't just watch this video and blindly go ahead and enter the trade. The trade entry date matters a lot. For the trades which I have placed before, I could do a video today or tomorrow, but that doesn't mean I'm buying the stock on that particular day. Every day the price moves, and every day it's important to determine exactly at what date you want to enter that particular stock, right? So all the best, guys. See you all in the next video soon.